Hi, welcome to Market Flow. I'm going to do a quick analysis of the market. I'm going to share with you a trade that I did today, how I pick it up. Like the video, subscribe if you like the content. Let's go ahead and start. So right now, this is the futures market right here. Very bearish candle right now. This is an indication that there is not many investors stepping up right now. And as you have seen in my channel before, this is what I've been calling an ending diagonal. This is the channel that has been forming the bull market ever since the recovery. So anyone who's been long in the market has been making very profitable gains all the way to this point right here, and many of them are starting to take those gains out of the table. We've seen that before with insider traders. A lot of them took a lot of their gains out of the table right now. So what does this mean? Right now the market is getting very close to a massive correction. I've talked about it in the past. It shouldn't be a surprise. I'm mainly myself cash. I've been doing a few trades here and there that I've shared on the channel. Some of them have been very profitable, and right now, if this ending diagonal continues to the downside, right now the target should be somewhere about 4,100. That's for the futures. If we look at the SPY right now, that should be somewhere around this level right here, 410 ish. And then I'm pretty sure that once it gets there, bear pressure is going to come all the way to the 400 level. If that breaks, then it's very likely that it's going to continue going to the downside, because we are going to start trading outside of this channel. Normally, once you get out of the trend channel, things can start trading down very quick. Some of the targets that I have right now, it's 400. Once 400 it's broken, it's going to go all the way to the 200 moving average, 380 at this particular point. It should find some buyers at this particular time, and then if that doesn't hold, 350. I think that will be the end of the correction, but that is what I'm looking at right now. Bitcoin. So Bitcoin looked like it was starting to recover. It tried to get out of this downtrend channel, but it got back in it again. Is the correction over on Bitcoin? I don't think so. As long as the SPY and the market continues to sell, I think Bitcoin is going to follow, just like it did back in March 2000 when the market crashed. So at this point, if this is the fourth leg, and the fourth leg has been completed right here, there's 1 2 3 4 leg right here. This looks like an ABC right here. So once it breaks this level right here, 35, it's very likely that it's going to come down to all the way to 30, 31 level. If that level is broken, 29, and then so on. The worst, or I guess the target that I have right now, it's for 24. That will close this gap right here. And then worst case scenario, coming all the way to 20, which is probably what you have heard in the media. And there's definitely going to be a lot of buyers at this level. I don't think it's going to go below that. Things can change. Why? Because the momentum on Bitcoin looks positive right now. This should be a good entry based on the momentum right here, getting out of the momentum, gathering positive momentum. But if this level breaks right now over the weekend, or maybe next week, then we can start seeing a downfall coming all the way down here, maybe closing this gap. If I look at Coinbase, which I think should be a good entry right now, it's breaking out of this downtrend right here. It's consolidating, maybe creating this you can call a bear flag. However, if it breaks to the upside, that will be a good entry signal for Coinbase. Coinbase seems to be a profitable company, a company that is doing very well, and based on its valuation right now, should be attractive for investors. So it's consolidating right now. This can be a bear flag if it breaks the downside, but then if it breaks above it and starts making higher highs, that should be a good entry signal for investors. If I look at RIOT, this is a stock that I've been trading myself. I have a few hundred shares right now, and the way I traded it is I went long on shares, and then once it got up, and right here what I did is I sold cover calls. I knew there was a gap right here that needed it to be filled up, and with that speculation that this gap needed to be filled up, I sold some cover calls, buy some puts. I made money on the downside, and today I covered, expecting it a bounce from this level. We'll see how that works. Next support should be around $30, 20 moving average. If that doesn't hold, then I think I'll be a little bit worried, because then that means Bitcoin perhaps will continue to sell off, and I'll probably get out of my trade at that point. Oil. So oil, we've been following it ever since it broke out. If you made your move on it early on when it broke out, you're probably sitting on some gains right now. And based on what Jerome Powell said, it looked like inflection trades have been pulled back a little bit. Not sure if it's going to be temporarily or it is going to sell off along with the market. Remember, last time the market had a large correction in March, everything sold off. I can expect that happening again, and one of the reasons why this could happen, if I look at XLE, which is the energy sector right here. So XLE break out as well along with oil, but it recently came back close to the 50 moving average. It's still in this uptrend right here. So if oil keeps going up, I can see energy sector continue moving higher. We'll see. It has to be determined. The reason why XLE took a break and I was long on the energy sector as well is during the week, a couple weeks ago on June 9. This is a masterpiece that the US did, and I think they pulled it out of their sleeves. Very well done, at least to cover any inflation in the short term. Is that they lift sanctions on Iran, so Iran now can sell cheap oil all over the world again. That is going to hurt countries where they were selling it for cheap, like maybe North Korea, maybe China, and it's going to benefit the rest of the world because now there is more supply of oil, and I believe that is why we saw this right here. As soon as that news came out, you can see June 10, there was a red candle right here. It was followed up with this, but for right now, oil, I think it's going to stabilize a little bit based on this news, based on the increase of supply of the oil. We'll see how that plays. Now let's go ahead and look at the dollar. So the dollar is breaking out. It's reversing very fast. This is trading against commodities, and I believe if we look at the weekly chart right here, you can see this is a positive divergence that happened right here a few weeks ago. Positive divergence right here. The momentum is to the upside. The momentum right now long term on the dollar is to the upside. How far can it go? We don't know, but the momentum right now is to the upside. I wouldn't bet against it right now. So that goes along with commodities like oil. That goes along with gold futures. Normally this right here will be a textbook entry for gold, and you may see some buyers coming out right here at this level. There is support right here. You can see that it used to be resistance, used to be support, used to be resistance, came back testing it. You can see that it's back testing it, this downtrend. This is a textbook entry for gold. Now, some of the things that worry me a little bit is that it came down very fast. You can see that it didn't stop at the 1800 level, it didn't stop at the 15 moving average. To me, this sounds like there's a lot of fear in the market. A lot of investors are probably cash. They don't want to trade it, they don't want to invest on it right now. This looks like a good entry, but based on how the dollar it's been moving, and if it's a long-term move on the dollar, I don't see much future for gold coming up. So the tech sector, it is important to know that the tech sector, it's been trading higher. You can see that right here, but it still has negative divergence on the weekly. It has been building this negative divergence for some time. If you notice, it's been trading outside of the bull trend. It did a back test. This is a second back test, and I don't think this is sustainable right now. It closed below previous support. That's not a good signal. It has negative divergence right here, and we're gonna review a few of the tech leading stocks to see what we can analyze from them. But right now, things look toppy, in my opinion. 1, 2, 3 waves. I think this perhaps is the end of the move. Once it gets out of this trend channel, things can get a little bit ugly, especially with the US yield. So the US Treasury yield, it's probably gonna drive the tech sector right now. Currently, if I zoom out, it's been going on this uptrend right here, and then it started to do this correction. In my opinion, the correction was over right here. This was an ABC. It came up rapidly a couple days ago when Jerome Powell was talking, and to me that was a signal that things were about to resume to the upside. However, somehow it got rejected right here, and this was a very confusing signal. Tech's been going up, the US Treasury yield went down today, but then tech sold today. Very confusing market. Unless there's a large correction coming up soon, I think that's where long-term investors are going to come in. But for right now, most of them are staying on the sidelines watching the market. So this right now can resume to the upside. This is support. If the Treasury yield continues to the upside, breaks above the 50 moving average, it can start making another leg higher, and that will be perhaps a large correction for the tech sector. We still have to see how that plays off right now, and I'm going to show you how technicals could help you get on the right side of the market. Then we've been following financials for some time. Right here at this level, we call it and say that it was overextended. However, there was not a sell signal, and it continued coming higher and higher. Right here, this candle right here, it happened on June 10th, I think the same day that the XLE sell off as well. June 10th, that was a signal of a breakdown. It closes below this upper trend right here. It closes below the 20 moving average. The 20 moving average starts sloping down. It had a couple days of consolidation, making this bear flag right here, and that was a good entry to the downside for a correction. There were a lot of signals. Momentum faded, and almost inevitable to have this sell-off. So if you're not bearish right now on XLE, there's going to be I would call it a dead cat bounce, maybe all the way to the 50 moving average. Perhaps that would be the best case scenario. That probably will move along with the dollar and some of the commodities. If you retrace, and then I think the move is going to continue all the way down, at least to the bottom of this trend line right here, the trend channel right here. So that's what I see right here for the financial sector. For right now, this is all I wanted to share about the market. Let me know in the comments below if you have a different idea. If you see things a little bit different, I would like to know that. It will help me on my trade. I'm going to review a few other stocks that can impact the market coming up soon. And so let me know what you think. Thank you for watching. Like the video, subscribe. Okay, so this is what I see in Apple. Apple's been doing this correction, triangle correction, for a while, and it has been completed. If it falls down from here, it's probably going to come down and it's going to close this gap right here. This will coincide with a correction on the SPY as well. It can probably come back all the way to 96, close this gap, and that will be the correction for Apple. Like you see it right here, negative divergence. Every time it gets somewhere at this point right here, it has been making lower legs. If on Monday things starts trading below the 50 moving average, that is going to be a sign that Apple could be going all the way to $96. So with AMD, there's a few things to notice. One, it did look like it tried to reverse. It went above all moving averages. That is really good. It hold all of that. To me right now, it looks bullish. There's really not much to say. The only bearish signal right now is that it has been trying to get above this uptrend right here, previous uptrend, and it has been rejected. This is an area as well that it worked as resistance in the past, and it's currently there. RSI it doesn't look oversold. It still has a little more room to go. So Amazon has been trading on this range for a very long time, and recently it starts making these higher highs right here, and it looks like it's about to break out. In my opinion, it's looking oversold. I don't know if it's gonna get that momentum to get above. So I was looking on unusual option activities for Amazon. For next week, everything that I see is bearish. 3480, 3490. This could be just an insurance for the downside. If I look at so Facebook right now, it looks like the target was already reached 340, and right now it can probably start retracing, maybe all the way to support, somewhere down here, maybe to 300. I think that's where you can find a little bit of support, maybe a little bit above. But as far as the upside goes, risk to reward, I think it's over. Okay, so Google right here, and right now it just looks very overextended, negative divergence, and even though it's trading above all moving average, this is where many institutions, traders start taking profits, starts covering to the downside. And the reason why, it's because these wedges right here, they tend to break to the downside. Once it breaks the 20 moving average, the 50 moving average, the downside is going to come pretty fast all the way to 200 moving average. If I make a measuring from here to here, this should be the minimum target right here. So you should probably get somewhere around 200 to the 2000 level. Microsoft is exactly in the same position as well, doing a double top. Weeks before, we were able to cut this uptrend movement right here. We point out that it was going to close this gap, which I'm going to take it away right now. It closed the gap. It went all the way to 260. That was a great trade. Anyone to follow the trade, congratulations. But at this particular point, I think that the trade is over. Negative divergence. Even though it's trading above all moving average, I don't see it coming up right now. It's probably going to take another breather. But we'll see. In my opinion, that was a good trade, but I'm out of it. And this is the trading idea that I had today, you could have actually made 20 times your money. But I'm gonna show you what happens. So there is this website right here. It's called unusual stock option activity. But if I look at NVIDIA, there's a lot of activity on NVIDIA, and there was plenty of activity yesterday as well. And as you can see right here, there were a lot of puts. Everything was a put. 770, 755, 760, 760, and all of them were dated for today, expiration day. So I saw this yesterday or a couple days ago, and I thought that this was going to be a good trade. And this is how it works. So this is the options that I was following. So these ones expired today. They're the 750s. They were trading a couple days for 20 cents. When I saw those option activities, which was the next day right here, you could have got in for $1, and they went all the way to 20 to 5. They closed at $5, which is $500. But if you would have got it early on, this went from 20 cents all the way to $5, which is 20x or more. Anyway, this was a great trading opportunity. Now, I'm not exactly sure if there's going to be a follow-up to this, but definitely NVIDIA looks very overextended. If you would have shorted the stock today, long term, I don't think there's really much to lose. Sooner or later, it will have to backtest these levels right here, 650, 620, maybe 700. So anyway, I think this was a good trading idea. Tesla's trying to break out right here. This looks like a bullish candle, and it goes, I mean, I don't know, Tesla looks like it's trading against the market, because the market today seemed a little bit negative overall, and today Tesla looked like it's breaking out of this triangle formation right here. Probably gonna go all the way to the 50 moving average. Anyway, that's it. This is all I have for you. Thank you for watching. Have a good day. Enjoy your weekend.
You need to know the market's going to go down sometime. If you're not ready for that, you shouldn't own stocks. And it's good when it happens. If you like a stock at 14 and it goes to 6, that's great. You understand the company, you look at the balance sheet, and they're doing fine, and you're hoping to get to 22 with it. 14 to 22 is terrific. 6 to 22 is exceptional. So you take advantage of these declines. They're going to happen. No one knows when they're going to happen. It would be people tell you about it after the fact that they predicted it, but they predicted it 53 times. If you don't understand the company, you have this problem when they go down. Eventually, they always come back. This one doesn't work either. People think RCA just about got back to its 1929 high when General Electric took it over. A lot of double nits never came back. Remember those beauties? Floppy disks, Western Union. The list goes on and on. People saying it'll come back. Well, it doesn't have to come back.